What's up, everybody? Today I'm going to be talking about how to create a winning strategy. This is going to be the second part of the two-part series, and I'm just going to be going over my strategy this time and how I trade my strategy. And yeah, so let's get right into it. So before previous video, I talked about you need a high time frame confluence, medium time frame confluence, low time frame confluence. So my trading strategy what do I look for? My high time frame confluence equals sweep liquidity, the hourly time frame, medium time frame confluence, 5-minute retrace, low time frame confluence is 1-minute confluence of anything. So that's my strategy. It's very simple. And yeah, let's get right into it. So let's start out with the hourly time frame. So I'm on ES right now. I'm gonna go over to NASDAQ. NASDAQ has been having cleaner price action lately. Anyways, what day should I pick? Let's do Tuesday? Sure. Tuesday looks like decent price action. Yeah. So Tuesday. Alright, so what do we have happen? We have this high time frame confluence on the hourly time frame. We have this high time frame confluence on the hourly as well. All we need is one of them to get hit. So what do we see? Bam, this high time frame confluence gets hit again, breaks through all these highs. So in turn, what am I doing? I'm looking for a 5-minute retrace. And right as I say that, this is what happens. Goes down, retraces, goes up. Now we go down to the 1-minute time frame. What are we looking for? We're looking for a 1-minute confluence. So we go right here. We have a break of structure. Break of structure doesn't count as a confluence. It just adds to your bias. And bam, keep going. What do we still have? Now what do we have? We have this fair value gap. And we have equilibrium right here. Let's keep going, see what happens. Keeps going down. News hits this fair value gap, almost hits equilibrium. Actually, would have hit equilibrium. So, in turn, we're still looking. This was a news candle. This was right at 9 a.m. So, Central Time, sorry. So, 10 a.m. Eastern Time. So, I want to trade it off of this. I would have waited for another confluence. Still got nothing. Still got nothing. What do we have? We do have equilibrium right here. So, I just need to break a structure. What do we have with when it breaks structure? We have this fair value gap getting filled. Bam, in turn, trade right here. Stops above there. We're going to target the hourly. We're going to target the hourly low. Actually, sorry, excuse me. We're going to go to our medium time frame again. What are we going to target? We're going to target this because it's medium time frame. I actually did take this trade. So what do we have? We have our, because remember in the last video, you guys should have notes about this. But what do we target? We target Low time frame or medium time frame? What are we targeting right now? Medium time frame. We're not targeting low time frame. We're targeting medium. Okay. Then, second take profit. What are we targeting? Another medium time frame. What do we have right here? Medium time frame. This is TP2. So, TP1, TP2, boom, and TP3. So, go in turn of this. Bam, bam, bam. Trade hits. Not one, not two. All three take profits. And stopped out, break even if you would have had a runner. Cool. That's our trade. That's my strategy. Nothing else to it. I'm going to show another example right now. As you guys can see, I'm in a completely different location. Thanksgiving break is over, and I just need to finish up this video. I'm just going to show you live examples. And yeah. So, also it's Monday. I didn't take any trades today. The market was just up really, really high. All right. So, this example on ES, I just found it. Friday, November 22nd. What do we mark out? We mark out buy side liquidity, sell side. It didn't go up that high. I'm going to get rid of that. Anyways, what do we have? We have buy side, we have sell side. Cool. Go down to the 5-minute time frame. Five-minute time frame, what do we have? Market opens. We have buy side right here, sell side, sell side. Cool. What are we waiting for? One of them get hit. As you can see, sell side didn't get, or buy side didn't get hit. Goes up to sell side. Cool. What do we need? We need a 5-minute retrace. 5-minute retrace right here. So 5-minute retrace ended right here. So now what do we need to get filled? Fair value gap. Now we're just waiting for a fair value gap to get filled. What do we have? Tiny little tick into the fair value gap. I would have needed more, but let's take a trade right off of here. What are we going to bring it down to? Go like this. Put stops above the 1-minute fair value gap because low time frame, what do you want your stops at? Above the low time frame fair value gap. Cool. We go to the 5-minute time frame. What are we looking for? We're looking for a draw on liquidity right here. Another one right here. Third one right there. Cool. Okay, what do we need? Now we're just in the trade. What happens? Look at this. We create another fair value gap. Another fair value gap created. This one gets respected too. What could you have done if you didn't like this trade? Could have taken this trade. Stops above here because that's where your trade would have been invalidated. Right here would have been a worse risk to reward. But see what happens. Dumps, hit TP1. And this is something interesting that I've noticed in the markets. So there was 2 trades today, right? There was this first trade where some people have gotten in. And then there was a second trade where some people would have gotten in. Correct? So what happens? This second trade, when people have gotten in, hits take profit 1, stops them out instantly because everyone moves their stops to break even after TP1 gets hit, correct? But people who take in this trade are still in this trade. So what do we see? it hits TP2. Look at that. So this second trade right here, look what happens. Stopped out almost instantly after TP1. Because that just shows you have the right trade. That's not a bad thing. But if you would have gotten in right here, look what would have happened. Would hit TP2. And it was one tick away from TP3. But what does it do? I don't even know. Stops you out right here. So it's like another winning trade. And there was 2 trades today. But what happens? This happens. Bam. Bam. Stopped him out instantly. And then let's see how this plays out. It would have stopped everyone out here. If people have gotten in here, they would have stopped everyone out. And then it's probably going to go all the way back down. Hits TP1 again. I have no idea if it goes all the way down or not. I mean, look at this. It just shows how price is moving. So if people would have gotten in right here, they would have gotten take profit hit. Volatility comes, bam, goes to hit TP2. You guys don't need to know this. I'm just kind of going on a rant right now. And then stops everyone out. So it's just how the market moves. That's about it. And yeah, it's just how to create strategies. I finished this at my other house. So yeah, just got back from Thanksgiving. Thanksgiving was good. It was all good. But just showing you guys how to create a strategy and a winning strategy at that matter as well. What you guys need: low time frame, medium time frame, high time frame. Hopefully you guys took note of that at the start of the video. But if you didn't, just go back to the start of the video and just watch that again. But thank you guys for watching. I hope you guys enjoyed this, and I'll see you next time.